Hi, Carl Roberts here from RTS Financial Planning, and today I just wanted to spend a few minutes talking to you about investing in shares versus investing in funds. Now, there's a lot of differences between the two, and when you've decided to make the decision to invest, remember there's the three things you need to consider first: what you're investing for, how long you want to invest, and the risk you're prepared to take. Now, that third option, the risk you're prepared to take, becomes very important when looking at the differences between investing directly in shares versus investment funds. So let's just talk about the two for a minute. Shares. So if you're going to invest in a share, you're investing in one company, a tiny portion of that one company. So you effectively own a tiny share in that one company. So let's take Tesco, the supermarket chain, for example. If you buy a share in Tesco, then you're buying a tiny piece of Tesco. The value of your share is very dependent on the success of Tesco. If Tesco do really well, your share price will go up. If it does badly, it will go down. But it's all dependent on how well Tesco does. If you decide to invest in an investment fund, now funds will invest into potentially 100 different shares, 100 different companies, and your money will be pooled together with loads of other investors. So what this does is it spreads your risk amongst lots of different companies. So if Tesco is one tiny portion of that overall investment fund and there's 100 other companies in there, if something happens to Tesco, then it's not going to have a major effect on your overall fund because there's still over 100 companies that could be doing well. Now let's look at some key differences between shares and investment funds. Let's take shares first. If you buy a share, you buy it into one company. You make all the decisions as to when to buy and sell that share. There may not be any charges for holding on to that share. You may pay some small charges for a brokerage account, but you'll definitely pay a small charge when you come to sell or buy that share. You could potentially lose all your money if that company goes bust, so your eggs are definitely all in one basket there. When it comes to investment funds, there will generally be a lot more spread. You'll have an investment manager that will be making on decisions as to when and buy and sell in which companies. Your eggs are all in different baskets. There will be charges to pay because you're paying that investment manager for the privilege of picking and choosing your shares for you in that particular fund. So which is better? Well, like most things, it really depends on your circumstances and how much risk you want to take. So a couple of ways you can decide whether you want to invest in shares or invest in funds is following these steps. So number one, how confident and how skillful do you think you are at analysing shares? Are you comfortable with checking all the company accounts? Do you want to monitor the stock markets every day and work out whether now is a good time to buy or sell? Because that's what you need to do if you're managing your shares yourself. If you're investing into funds, there'll be an investment manager doing that for you. So as long as you've got your risk right and the fund links with the risk you're willing to take, then the fund should do its job for you. At the end of the day, it all comes down to risk. Decide how much risk you want to take. The more risky you want to go, then probably an investment into shares could be the way for you if you're prepared to do all that work monitoring and analysing the shares. But if you're less risky and you don't feel confident doing all the work, then investment funds could be the right approach for you. If you need some additional help, you can always contact us anytime. Details will be at the end of this video. Thanks for listening.